We'll now move to internal processing, and the first step of that is the file login. Now it sounds very exotic, but basically it is making the data entry, confirming availability of documents, and then identifying it with a file number or a unique identifying number. Today the file login is done on the system. So there is a data entry operating team which actually enters all the data which is submitted in the loan application form into a system. There often is a recheck done to make sure that the spellings are right and all the data is entered, but the basic principle here is that you've got to make sure that all the data that is in the application form is captured in your system. Now this becomes very important from various stages. At the time of disbursement, at the time of recovery in case there's a delayed payment, at the time of submitting data to the regulators, at this time of claiming any refinance from, say, the National Housing Bank, from the time of reporting to credit bureaus, the quality, completeness and comprehensiveness of the data is extremely important, right? This could be done by a team and they could be called anything. They could be called quality control, data entry operators, etc. But the principle, like I said, is to capture data. Now along with this, there is another element also. There are a set of documents, if you remember I mentioned, which are mandatory at this stage, or some which can be submitted later. An example of submitted later can be, for example, property documents, because you have not yet identified the property, or you have the property identified but you have not yet collected the documents from the developer, right? So now if that happens, those documents are not required to move the file forward at this stage. Of course they will be required at the time of disbursement, but not at this stage. However, certain other documents absolutely required even at this stage. The KYC identifiers, your PAN card certified copy, your Aadhaar card certified copy, and such other identifiers as required by RBI's mandate on the KYC requirements. Then your income validation documents, your bank statements, your tax returns, your salary slip, or your balance sheet and P&L. These are also documents which are essential to decide in principle whether you get a loan or not, and if you do, how much do you get? What is your credit worthiness? Now this, once the file moves to a stage where all the mandatory documents are given, then while a physical file is actually created, and it can be created in different ways through dividers, etc. Also what happens is there is a reference number, file number, account number, some number generated which then uniquely identifies a particular application with a particular number. So that if you have people with multiple names, you don't have to worry, because each name, each file will have a separate number. At the same time, two things can happen or will happen. The person who has sourced these loans, the DSA or your sales team, will also need to know what are the additional documents required from the customer. For example, like I said, the property documents, not yet submitted, not yet available, not yet identified. However, if the basic mandatory documents like KYC, balance sheet, P&L, salary certificate are not available, the file will not be logged in. A unique number will not be created, and that particular physical file will be given back to the sales team, to the DSA or to the customer, said that we need this, and only after we get this will we log your file in. Now once the file is logged in and it has entered the system in terms of completeness of data and mandatory documents, you then will move on to the third stage, and the third stage is where you start doing the underwriting or the credit appraisal. We will talk about that in the next process, along with the fourth process, which is the double checking and the maker and checker concept that comes into play in most lending institutions. Now one thing we have to remember here is that in almost all housing loan applications made in the world, there will always be a co-applicant, either for emotional reasons like a parent, or for tax reasons because the investment of the own contribution is coming from the sale proceeds of a house owned by a parent, or of course there will be a sibling or a spouse who is supplementing the servicing of the loan and therefore enhancing the eligibility. Now whenever there is a co-applicant, we have to remember two things. One, that all KYC details and documents and any income related details of the co-applicant have to be submitted with equal seriousness and importance as it is for an applicant. The other thing, and it's a bit legal, that it doesn't matter whether applicant A and co-applicant B or applicant B and co-applicant A. Legally and every other way, it is equivalent to the same thing. One other thing that you need to remember is that every owner of the property, remember this, every owner of the property has to be an applicant for the loan. The reverse is not necessarily true. So husband-wife, if the husband owns the property, the wife could be a co-applicant.